please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Steadily climbing higher for the markets. In fact, for the last 1 month, a month back, the Nifty had dipped below that 10,000 mark. And since there, it's been climbing higher with a 1 month return of 5%. And it has been the IT which has provided the leadership. So if you pull up the Nifty IT chart, you can see it's moved up from levels of 12,500 thereabout to now 14,000 plus. The Nifty IT chart will also be up for you on your screen for the last 1 month. Let's invite our experts. Ashwani Gujral and Prakash Gaba on the show now. Ashwani, drifting higher today as well. Your thoughts on the Nifty index per se and Nifty IT? Prakash?
Oh, Nifty IT. Nifty certainly I would say is looking good to me. We can see levels closer to around 10,700, 750 zones. 10,000 is possible on Nifty. As for Nifty IT, I have not looked at it. I think I'll skip it. But Nifty Bank looks like there's the strong support in the lower regions, maybe around 24,500, 900 zones. We can see maybe a climb up to 25,140.
Okay, all right. Then let's go across to Ashwani. Well, Ashwani, I'm looking at the bond yields. They are at around 7.7%. The crude is at $74 per barrel. But the market is just ignoring everything. 600 points in a month. Are we good for more?
You are looking at the wrong place. Look at the market, how it's reacting to news. The point is not whether news is good or bad. The market has not decided not to take cognizance at the moment.
Right.
So my sense is we are in the midst of a breakout. So anybody who's not in needs to get in, because once the short covering starts, another 10 odd points, then you will see the market really roar towards the end. So particularly banks, ICICI Bank, HDFC Bank, kind of down since morning. They just need to recover. All the other private banks are recovering. So my sense is that we should move higher and maybe at least 100 points higher. So that should be the kind of target people should have. But it's clear that market is moving on at this point, and the entire time we haven't been able to break 10,500. In fact, today's low was 10,540. So support is coming in at higher and higher levels. That's extremely positive. Now, having said that, Kotak Mahindra is a buy with a stop of 1150, target of 1200. Oro Pharma is a buy with a stop of 630, target of 655. And IndusInd Bank is a buy with a stop of 1860, target of 1910.
Okay. Ashwani, we've been talking about IT since morning, but just to refresh it for our viewers, from here on, what would you do with TCS as well as a trade in any of the other IT majors, if at all?
See, the mistake people can make is, it's run up too much. If you buy something after the first run up is over, you make the maximum amount of money because people are just about getting in. If Friday run up was enough, today again it's run up, because chances are that fresh allocation and the underweight position is getting corrected. So even now you can get into IT. Maybe you'll see a couple of days of consolidation correction, but I think these stocks will go much higher from here.
Okay, all right. The stocks will go higher from here. But Prakash, what stocks do you have for us for today's trading session?
I too have Oro Pharma. Aurobindo Pharma certainly is looking good, seen a good consolidation, and today's move is encouraging. It's given kind of a breakout here, and the fresh up move should start here. Technical target on the upside is 660, stop below 620 on Oro should be fine. I also like Catalaf on the pharma space, looks good, seen a consolidation, today's move is good, can climb to levels closer to 407 zones, stop below 385.
Okay. All right, Ashwani and Prakash, thank you very much for that. Let's get the early rates up for you in the European markets. The futures were pointing to a mildly positive start. Well, no, it's mildly lower, so in line with the rest of the Asian markets, where Shanghai, Hang Seng have a red tick going for itself. So FTSE, CAC and the DAX down 0.1%. Get into a break. When we return, we will tilt our attention to the earnings corner and get you the key expectations from the numbers today. LIC Housing Finance, Bharat Financial, Cholamandalam Finance and Bharti Infratel.
Well, TCS continues to do well. In fact, in the last 1 month, I was taking a look at some data points. It's up close to around 25%. And in terms of market capitalization added, it's added close to around 2.4 lakh crore. It's hit $100 billion in terms of market capitalization. But just in the last 1 year, it's added 2.4 lakh crore. Infosys' total market capitalization is 2.5 lakh crore. So it's almost, done an entire Infosys. And if you take a look at the smaller ones, well, in terms of Tech Mahindra, well, the addition of TCS is nearly 3 times what Tech Mahindra's market capitalization as well as for the other couple of ones as well. If you take a look at it, quite a huge addition is what we're seeing. 2.4 lakh crore in a single year. Big money being made over there. But
and a lot of the optimism is to do with money moving out of the beleaguered banking and financial sectors into IT, because investors were underweight the IT sector. So money is moved from banks to IT. So let's talk about the financial space.
Absolutely. Let's go across. We have Abhishek who joins us in the studio. Abhishek, you're tracking a lot of earnings. Run us through the list and what should we be watching?
Well, let's begin with LIC Housing, Nigel. So over there, the loan growth has been tepid in the region of 15 to 16%. So loan growth above 15% will be positive. Last quarter, it was at 15.4%. We need to see how the improvement in NIM happens or not. Remember that in the previous quarter, they reported a 12-quarter low NIM of 2.33%. So gross NPA below 1% will be positive. Last quarter, the gross NPA was a 12-quarter high at 0.87%. Now, we also need to see the impact of rising yields on their cost of funds, and how that shapes up will be seen closely. Our polls suggest an NII to be down 3.2% on a YY basis, but on a sequential, that is quarter on quarter, NII should be up 12.1%. And net profit, if you compare on a YOY basis, our polls suggest a flattish trend of 531 crores, but on a sequential basis, it should be up about 8.2%. Coming on to Bharat Financial, now this has been a strong recovery in the rural economy, and we saw with disbursement in the previous quarter, that is Q3, was at all-time high for Bharat Financial. And what I have been speaking to analysts on street, they suggest that the customer acquisition in the first 3 months of this calendar year has been very strong for Bharat Financial. So we need to see how the disbursement pickup happens and how the customer base, which has picked up, because other players are busy in their transition towards small finance bank or with their asset quality woes. So improvement in gross NPA, which was at 4.6% in the previous quarter, will be positive. Here also we need to analyze the impact of rising yields on the cost of funds. Now remember that last year Q4 FY17 Bharat Financial just came out of demonetization, and they took all the pain in the balance sheet. So it's not favorable to compare on a YY basis. On a like-to-like basis, that is quarter on quarter, our polls suggest an NII growth of close to 13.3%, while net profit to grow at 16.5%. CV sales have been pretty strong. So Cholamandalam, which is expected to report earnings today, the focus will be on the disbursement front. Now we have seen, CV sales across manufacturers being strong in Q4 also, as it was in Q3. And in Q3, if you remember, Cholamandalam reported a 31% growth in the sequential vehicle disbursement. So AUM growth above 20% will be positive. Last quarter, it was at 22.5%. Improvement in their net interest margin, anything above 9% will be positive. Last quarter, the gross NPA was at 3.7%. Improvement over there also will be positive. Remember that the stock is already hitting 52-week high ahead of its earning. Our polls suggest an NII growth of 25.5%, while net profit to grow at 22.5%. Back to you.
Okay, all right, Abhishek, thanks so much for that. Well, Rima, coming across to you, what are the expectations from Bharti Infratel?
Well, it could be a soft quarter. So according to our poll, on a sequential basis, that's on a quarter-on-quarter basis, revenues down 2.5%, margins lower by 90 basis points. So the key reason for that is it will be the first full quarter of revenue impact from the tenancies which were lost in Q3. So basically, companies like Tata Tele, Aircel, Reliance Communication have all shut down their operations, as a result of which the money that they would all utilize tower services. That's from Bharti Infratel. Now that money is lost because some of these smaller players have shut shop. So that is the key reason why, it could be a soft quarter for Bharti Infratel. But the street will closely be watching about, what's happening with Indus. Indus is a joint venture of Bharti Infratel, Airtel, as well as, Infratel, Idea, as well as Vodafone. Reports suggest that Bharti Infratel will be looking to buy Indus or perhaps even merge. The latest from Nisha, our colleague at CNBC TV 18, was that there could be a merger between Bharti Infratel and Indus. So that will be closely watched.
Okay, all right. We'll wait by for those set of numbers then. But the Nifty is holding well in the green. The markets are virtually at the high point of the day. More number of stocks advancing than declining. So the breadth of the market as well is looking quite good. But focusing on some macros, then India's current account deficit nearing 3% with rising crude oil prices and declining FDI flows is a cause of concern. CNBC TV 18's Lata Venkatesh spoke to a whole host of experts like Sajid Shenoy of JP Morgan, Mr. Goel, a member of PMEAC, as well as Neeraj Kambir of Nomura to get their sense of the way forward for the current account deficit. Let's listen in.
When oil prices move up so rapidly as they have in the last 6 months, this is an adverse terms of trade shock for India as a large oil importer, and more fundamentally, this makes the growth inflation trade-off much worse. So that's a more fundamental problem. On the external front, we've had a view for a very long time. 6 months ago, we said that in a world where growth was very strong, India's exports underperformed. And last year, despite growth slowing, imports were very strong. So despite GDP growth slowing in 2017-18, the current account deficit is on course to tripling from $15 billion last year to almost $50 billion in 17-18. Now, if on that base you overlay a crude estimate of about $70 a barrel for 18-19, the current account deficit is about $75 billion or about 2.7% of GDP. So not nearly at 3, but above the 2.5% considered sustainable.
We should not extrapolate from the current situation because markets, there are possibilities of correction. One reason for slow export growth has been the GST, and the GST Council has shown a very fast response. They need to sort of go into this in a very granular fashion and see what are the constraints specifically and what can they do about it quickly. And for oil, most analysts still think that the long run oil price is between 60 and 70, because if it will not sustain for very long above 70 because of the supply response or loss of market share and longer term substitution for non-oil sources of energy. There are a number of sort of self-correcting features in all markets. Remittances into India rise, which helps the current account adjust somewhat. So as long as we take action, I think there is no need to really panic. And in fact, panic is what creates a tipping point, not the market volatility.
At the margin, this kind of underperformance by rupee should actually help exports, even though exports per se may not be that currency sensitive. But at the margin, the 6% underperformance versus some of the major currencies is something which should help. And we should see some benefit of that coming into our current account numbers going forward. Our estimate is that every $10 of increase in crude oil prices adds to about 40 basis points of current account deficit. So we were averaging at 2% of current account deficit at an average oil price of about $67. So from 67 we go to 77 average, we should see about 2.5% current account. Now 2% is a safe zone, 2.5% is somewhat concerning, but still not a panicky zone. It's somewhat concerning. So I think we can absorb that additional $10, but need to be vigilant.
And as promised, let's shift focus to the commodity space. Manisha Gupta joins in to give us a complete roundup. Hi, Manisha.
Thank you so much for that, Nigel. Well, we are talking about sugar right now because it was in the last week that the Government of India constituted a group of ministers. It consists of 4 ministers, and we hear from our sources in Delhi that that ministerial meeting is going to happen today. The meeting, of course, is about the arrears that the mills owe to the farmers at the tune of nearly 18,000 crores, and the estimate is that by the end of April, that amount is going to balloon up to nearly 20,000 crores of cane arrears as well. So, of course, with the sugar prices declining, mills have been in a very dire state on how they would be paying these cane prices to the farmers. So it is in the best interest of all the stakeholders, including the farmers and the mills on the other side. And since it has been ballooning in sense of the cane arrears, that is what the ministry is going to sit today and decide on how to tackle this situation. Remember, we are looking at a very high sugar output this time around. A record high of 30 million tons already has been done. 31 million tons is perhaps where we will stop, is the industry estimate coming in. It has been Maharashtra which has been a magic number there. 12 million tons of a record output in sense of sugar has come in from this state alone, and that clearly has been increasing woes for the industry. The cane arrears is something that, of course, is something that the government and the mills have not been able to tackle. So that is one area that we will see some direction, some directive, some decision coming in from the government today. Aurobindo Gayan now joins us to talk more about that. Aurobindo, hi. We will talk about the other commodities, but if you're following sugar, that is, what is your sense, the way the prices have been moving? Will the meeting today be able to come out with any directive? We have seen the sugar prices and sugar stocks actually do slightly well ahead of that meeting.
Well, I think the earlier part is concerned. I think the long due pending activities, and believe this meeting should be a little affirmative to the farmers especially. But then the dues which have been there for a pretty long time has to come to a point where the dues have to be paid to the farmers by the millers. But then I think besides that, the supply side of the market, which is playing a major role, like we talked about 30 million tons of production, which is actually year-on-year basis, it is rising. So I think that is, I would not say it is a negative scenario to the market, but then this is the reality that the supply numbers of sugarcane is actually increasing. So the sugar is also yielding better, and that is what making the sugar prices being lower on the short lower onto the trend. So I think this phenomena will be there maybe for another 6 months or until the next season. The supplies of sugar definitely are going to remain on the weaker side, subject to heavy supply in the market. But then as far as earlier part is concerned, I think this meeting is going to be very important to look at it.
Well, absolutely. And the industry has been asking the government to pay to the farmers some amount directly into their account. So let's see on what all of those considerations actually do being taken in. As being said, it is an important meeting, especially for the sugar as an industry, that the GOM will be holding today. But Aurobindo, what is your sense also on the crude oil prices? Because we are holding around $74 a barrel. The last 2 weeks have been of strong strength. We've seen 20% gains from the Feb lows, so in bullish territory in that sense.
I think the positive momentum hasn't changed at all, although it has moved to a new territory band of the prices. But I think some more dollars of gain are pending in the oil prices. If we talk about Brent, which is around $74 now, might go to another $2.5 upside. If I talk about the WTI, I think it is almost approaching $70. So the trend is now strongly bullish. So short to medium term perspective, I think I'll continue to hold. At the Indian perspective, I would say we have already seen price of 4,500 rupees per barrel here in India. I think another new normal range towards 4,650 or maybe 4,700 rupees per barrel cannot be ruled out. So I'll continue to hold on to a buying view, and any dip is always an opportunity to buy on lower levels.
Okay, all right. Thanks so much, Aurobindo, as well as Manisha, for joining in and running us through those details. Keep an eye out on the index. We've shaved off a tad bit from the top. ICICI Bank has seen a bit of a downtick, as well as UPL. Both those two intraday charts actually should come up for you. Both those two stocks seeing some selling pressure in the last few minutes. UPL as well is the other one. Well,